This is a little cheat code I use to read the stock market. A lot of people call it a God tool, whatever it is. For me, it's just a better way of actually seeing the information already provided to all of us. So this God tool is called the bookmap. So let's get right into it. All right, so before we actually get into depth about what the bookmap is, how to read it, what I look for, you first have to understand the difference between the ask and the bid, right? Big difference between these two. So as y'all know, when you're trading futures, options, contracts, stocks, whatever it is, you always see the bid price and you always see the ask price. So what is the bid and ask price, right? What is it? So the bid is the price a buyer is willing to pay for an asset, right? So the bid will be the price a buyer is willing to pay for an asset. No matter what it is, that's what the buyer is willing to pay for. And the ask is just the price a seller is willing to accept for an asset. So if I'm selling a basketball, right, and I'm selling it for $100, I'm willing to sell it for $100, meaning that price, that ask price of that basketball is in $100. If I'm a buyer, if I want to then go buy a basketball, I only want to pay $90 for it, right? I'm only okay with paying $90 for that basketball, but the seller is selling it for $100. The difference between those two prices is called the spreads. Now, when you're talking about futures, spreads don't really make a difference because there really isn't a spread when it comes to futures. Now, when you're talking about Forex, options, stocks, the spreads get wider, and that's actually important to know why they do that. But before we get into that, man, let's just go ahead and go straight into what I'm actually using the bookmap for. And that is just to tell who's aggressive, who's passive, right? We're reading the auction. The stock market is an auction. When it comes to trading stocks, right, there's no such thing as buy and sell volume. There's literally just volume because there's two sides to every single transaction. Because of that, we can't tell if it's buy or sell volume because there's always both. There's always going to be both sides of the volume, right? So what I do to determine who's in control is I look at the market auction. I look at who's being aggressive. And a tool I use to define aggressiveness is the bookmap. The bookmap is a very easy tool you can use to read who's being aggressive, who's being passive. Are there more aggressive buyers? Are there more aggressive sellers? Who's moving the market, right? That's what we use bookmap for. So to determine it, a quick definition here, man. So market orders are aggressive orders in the stock market. Limit orders are passive orders in the stock market, right? So aggressive buyer, what is an aggressive buyers? Aggressive buyers are buyers who are putting in market orders. They're buying at the ask. They're buying at what the seller is willing to sell for. They're being aggressive. They're buying at a higher price. The ask is always higher than the bid, right? Because the sellers always want to sell for more. The buyers always want to buy for less. So they're buying at the ask. They're aggressively buying really quickly. They're hitting that market order, which hits the ask price, so they can get in filled quicker and get in right when they want to, right? Aggressive sellers are the exact opposite. They'll sell at the bid. They want to get the fuck out, liquidate their position. They're going to sell for a cheaper price, right? They're selling for a cheaper price. They're hitting the bid. Market orders hitting the bid. Hence, they're being aggressive because they're selling at a cheaper price. So all the buy and sell limit orders sitting in the stock market are the passive sellers and buyers and sellers, right? There's the passive participants just sitting there. Let's say I want to buy a basketball once it reaches $110. So I put my order in to buy a basketball once it hits $110, and I'll sit there on my order, wait patiently. Whenever that hits $110, it'll go ahead and get filled, and I'll go ahead and buy it, right? It's a limit order. Y'all know what limit orders are, right? So now that we know that, what do we do with that information, right? How do we read that information in the stock market? You can't look at candlesticks. You can't look at volume bars. You can't look at indicators. You have to use order flow. Order flow is literally just a record of all the buy and sell orders for a stock, asset, whatever it is, and it's showing you how many people want to buy and sell, and it's showing you who buys at the ask, who buys at the bid, where the passive orders are, blah. So y'all see me use the book map, and it's a little crazy, right? It looks like this. People call it the astrology chart, the bubble map, the balloons, whatever you want to call it. For me, it's a book map, simple book map. And what this is showing you, it looks super complicated. It looks super confusing, but it's actually so simple if you just break it down. So imagine this is a stock of a chart, right? We have time on the x-axis and price on the y-axis, just like a candlestick chart, same exact thing. The difference is instead of seeing candlesticks, right, you're seeing red and green bubbles, balloons, whatever you want to call it, and a bunch of numbers here on the price axis. So what this means, and you're also seeing these dark lines, right, that's associated with these numbers, but we'll get into that here in a little bit. But what this means, guys, it's really simple. All this is, the green bubbles are the aggressive buyers. Once you hover over them, right, it will show you how many they are, right? The red bubbles are the aggressive sellers. The bigger the bubble, the more aggressive sellers there are. The bigger the green bubble, the more aggressive buyers there are. Now, these dark lines you're seeing on the book map here are all the limit orders sitting in the market, and they're associated with these numbers right here, right? This is the order book, and what the order book is honestly only telling me is, let's see here, I don't have a This is called the COB, which is the order book. Okay, and what this is telling me is all the numbers of passive orders in the market. So wherever the number is the highest, right here you see 222, you'll see an orange line appear on the map, right? 200. 182, 128, you'll see orange lines appear on the map. So these orange lines just signify the limit orders, the passive sellers, passive buyers sitting in the market. Now, if this limit order is above the current price, which is right here, it's a seller. If it's below the current price, it's a buyer. Very important to know. Write that down. Now, what do I look for when it comes to the book map, right? I only look at the book map mostly when we're approaching a key level. For me, supply and demand, whatever it is for you, when I'm looking at book map, I look at it at a key level, most likely only, right? Just if you're looking at this book map 24/7 throughout the whole trading day, you're going to drive yourself nuts. You're going to go crazy just staring at this shit all day. So what I'm looking for, right, is huge amounts of passive orders in a supply area or demand area. For me personally, if you have your key levels, right, you can use book map in combination. You want to see big passive orders at your key level. Next thing I look for, right, is aggressive buyers or sellers failing to move price up or down. So what this basically means is I want to see a big red circle fail to move price down, or I want to see a big green circle fail to move price up. That's one of the things I'm looking for. The next thing is I want to see aggressive buyers or sellers, I want to see trap participants, right? Which is basically the same thing. We're going to go over the definition of that here in a second, right? But important to know, price will continue to move up if there's more aggressive buyers and passive sellers, and vice versa. So for example, right, what happens here? Let's go back up here. Price starts moving up, right? And we see large amounts of passive sellers start to appear on the book map. Not only that, we also see large amounts of large amounts of aggressive sellers on the book map getting into large amounts of passive buyers, right? Because it's below price, these aggressive sellers are meeting the passive buyers. Now, what you can tell right here is after these sellers meet the wave of passive buyers, there are still passive orders left over, right? So what this means is at this specific price point, there's a lot more of passive buyers than there are aggressive sellers. So the sellers are trying to move price up, but all the passive orders are eating this price, and the market continues to make its move up, up, and up. Right here, we see green big bubbles start to appear, and price continues to move up, up, and up, which basically means that there are more aggressive buyers and there are aggressive passive sellers. Price will continue to move up, right? Another example, right? It's kind of a trap player in absorption. What we see here, price pushes up into 4406, 4405, and a big green circle is then presented. Yet price fails to move down. So what this is showing me is pretty simply, let's say this was a supply zone, price pushes up into supply, we see a big green circle, yet price fails to move up. This is called absorption or a trap player, and what this means is that there is an aggressive buyer who failed to move price up, passive sellers absorbed all the aggressive buy orders, and then aggressive sellers started to step up and move the price down. Right here, what happened was a big aggressive seller meets a big line of passive buyers, fails to actually get all the way through, and price starts to move up. So you can use the book map in correlation with your strategy. Whatever, I don't care what strategy you use, combining order flow, combining book map is so key. Now, let's move on to the next slide here, and this is kind of a nice little example of something I can show you, right? So what we see here is price approaches, again, a nice level of passive sellers. We see big green bubbles appear, yet the passive line is still there. Buyers fail to fill all these passive sellers, meaning that there are more passive sellers than aggressive buyers, and price starts making its move down. And we see big red circles appear while price is getting rewarded to the downside. Right here, we see big green circles appear, yet price does not move up. Right here, we see big red circles appear, completely destroys that line of passive set buyers, price moves down. Green circles appear, fail to destroy that line of passive sellers, price continues to move down. This is what I use a book map for, and it's very, very useful. So how you can actually use this in combination with your strategy. Y'all know I trade supply and demand, right? So all I do is wait for price to approach supply. When price approaches supply, I look at the book map. I notice large amounts of passive sellers sitting in supply. Yet it gets met by aggressive buyers that fail to actually go through and destroy all that passive buying pressure we're seeing, or passive selling pressure we're seeing up here. So what happens is we get a perfect balance off of supply. And while live trading, going into this play, I see a large amounts of passive sellers. I see aggressive buyers actually getting absorbed and getting trapped. So this is a nice opportunity to take the market short. Other example I was showing you, right? This is a classic breakout retest play for a continuation play, right? We break this supply zone with aggressive volume, market comes back down into the supply zone, and we get a nice absorption of sellers, right? Big sellers failing to move price down, and the market starts pushing way back up. So the way I would have played this, right? I would have waited for the breakout, saw aggressiveness on the breakout, found liquidity right here to be swept, a previous low, saw aggressive absorption, and as soon as we swept the liquidity with this aggressive absorption, right? This passive buyer failed to actually get destroyed by this aggressive seller, I would have gotten in there and capitalized on a nice little long off of this supply zone. Now, again, there are other tools you can use to read order flow. You can use a footprint chart, depth of market, times in sales, and level 2. Whatever it is, man, they all tell you the same information in different visually appealing ways, right? But remember, order flow makes reading the auction so much easier, right? It gives you the exact amount of aggressive buyers and sellers, and it gives you the exact amount of limit orders sitting at specific price points in the market. Now, if y'all enjoyed this video, make sure you leave a like, comment, and subscribe. Comment if you have any questions. I'll link my free Discord and my free course on my entire strategy down below. And as always, guys, trade safe and be smart. I'll see y'all in the next one.